Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Ganfeng Lithium Group Co. Limited annual report. Ganfeng Lithium Group Co. Limited offers a diverse range of businesses and services that cater to various industries. The company's primary focus is on manufacturing and selling lithium products, including lithium hydroxide, carbonate, fluoride, chloride, and other compounds. These products are used in the production of electric vehicles, energy storage systems, 3C products, chemicals, and pharmaceuticals. In addition to its lithium product offerings, Ganfeng Lithium Group Co. Limited also provides a range of battery-related services. This includes power batteries, energy storage systems, consumer electronics batteries, and solid-state batteries. The company's expertise extends to the production of lithium battery materials, such as precursor materials and materials for solid-state lithium batteries. Furthermore, Ganfeng Lithium Group Co. Limited offers innovative solutions in the field of battery recycling. This service is designed to help reduce waste and promote sustainability in the industry. With its extensive range of products and services, Ganfeng Lithium Group Co. Limited has established itself as a leading player in the lithium market. The company's product offerings can be broadly categorized into several key areas: lithium compounds, including hydroxide, carbonate, fluoride, chloride, and other compounds, lithium metals, battery-grade lithium metal, lithium foil, and other lithium alloys, cesium and rubidium compounds, organolithium compounds. The company's services can be categorized into the following areas: power batteries, energy storage systems, consumer electronics batteries, solid-state batteries, battery recycling solutions. Ganfeng Lithium Group Co. Limited market capitalization of $196 billion is significantly larger than the average industry peer of roughly $1 billion. This shows that Ganfeng Lithium Group Co. Limited holds a significant advantage in their industry. Ganfeng Lithium Group Co. Limited trades at a higher price-to-book ratio of 5.74 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 53% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. Although shareholder equity has increased, the share count has risen while revenue is declining. This raises concerns that equity growth may be driven by dilution rather than business performance. The sustainability of the business model remains unproven. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth and decline can be summarized into several key areas. Revenue growth is driven by a combination of factors. The increasing demand for lithium metal and compounds, as well as lithium batteries, has contributed significantly to revenue growth. The Chinese mainland market has also been a major driver of growth, with the sale of industrial products and government grants playing important roles. Additionally, the accelerated rollout of charging infrastructure, creation of smart cockpits and autonomous driving ecosystems, and ongoing advancements in battery and intelligent technologies have all contributed to revenue growth. Furthermore, the growing adoption of electric vehicles, driven by government subsidies, investment in renewable energy development, and increasing market penetration rates, has also led to revenue growth. The expansion of global charging networks, increased consumer acceptance of electrification and intelligence, and strong export scales have further boosted revenue. On the other hand, revenue decline is primarily driven by a few key factors. Intersegment sales in the lithium resource and others segment have contributed to decline, as well as comprehensive cost performance disadvantages of new energy vehicle models in some markets. Supply chain cost volatility risks and phased-out tariff reduction policies have also led to revenue decline. Additionally, decreases in fair value losses on financial assets at fair value through profit or loss and derivative financial instruments have contributed to a decrease in other expenses, but not necessarily revenue growth. The decrease in sales from top 5 customers and fair value losses on financial assets at fair value through profit or loss have also led to revenue decline. Overall, the drivers of revenue growth and decline are complex and multifaceted, with various factors contributing to both positive and negative trends. The net income of a company underwent significant changes between 2 years. Initially on page 81, it is reported that the net income increased by RMB 3,682,183,178%, from a loss of RMB 1,068,512,000 to a profit of RMB 613,671,000. This substantial increase in net income can be attributed to various factors. The profit margins also witnessed an improvement during this period. The net profit margin on sales increased from -14% to 5.5%, while the return on investment indicator rose from -2% to -0.9%. These changes indicate a significant shift in the company's financial performance, moving from losses to profits. On page 84, it is mentioned that the gross profit margin increased from 11.4% in 2024 to 15.8% in 2025. This increase can be attributed to the recovery in sales prices and the rise in sales volume of lithium salts and battery products due to shifts in supply-demand landscape and volatility in the market. The company's financial performance indicates a mixed picture regarding its ability to generate positive operating cash flow. On one hand, several key points suggest that the company is indeed generating positive operating cash flow. For instance, on page 14, it is reported that the company achieved a profit of RMB 2,779,812, which implies a positive operating cash flow. Similarly, on page 88, the company's net cash flows from operating activities are stated to be positive at RMB 2,944,845 for the year 2025. Furthermore, pages 131 and 133 provide additional evidence of the company's ability to generate positive operating cash flow. On page 131, it is noted that only a small portion of the total utilized amount as at December 31, 2025 was unutilized, indicating efficient use of funds and generation of sufficient operating cash flow. Page 133 explicitly states that the company is generating positive operating cash flow. However, there are also instances where the company's performance suggests otherwise. For example, on page 25, it is reported that the company experienced negative operating cash flow. This conflicting information highlights the complexity of the company's financial situation and underscores the need for a more nuanced analysis to fully understand its ability to generate positive operating cash flow. The company's debt level has undergone significant changes over the past period. Initially, it decreased from RMB 78.83 billion to RMB 78.1 billion on page 4. However, this trend was short-lived as non-current liabilities increased by RMB 1,572,323, 7.4%, on page 5. Furthermore, on page 33, the debt level rose from RMB 4,069,927 to RMB 6,938,195, indicating a substantial increase. The reason for this surge was attributed to the issuance of $1,370 million in convertible bonds on page 130. In terms of interest expenses, there has been an upward trend. On page 26, total interest expense on financial liabilities, not at fair value through profit or loss, increased by RMB 386,089, 33%. Similarly, finance costs, interest expenses, rose by 35.2% on page 86. However, the company expects a decrease in interest expenses due to the restructure of existing overseas borrowings and optimization of capital structure, as mentioned on page 130. Management is optimistic about the company's outlook, citing opportunities for growth in expanding markets. One key area of focus is the entry into the lithium battery market, which presents a significant expansion opportunity. However, this growth comes with increased expenses, including higher employee welfare costs, office travel, business entertainment, and sales commissions. To mitigate potential risks, management will closely monitor foreign exchange fluctuations and utilize financial instruments for hedging purposes when necessary. This proactive approach aims to minimize the impact of currency volatility on the company's operations. Overall, management is positioning the company for growth while being mindful of the need to manage associated costs and risks. The company's financial history reveals a consistent trend of distributing profits back to its shareholders through dividend payments. According to the provided information, the company has indeed paid dividends in both 2024 and 2025. The exact amounts for these years are noted as $589 and $4,578 respectively. This demonstrates a commitment to returning value to investors, which is a key aspect of a company's financial strategy. Concerns about inventory buildup and supply chain disruption have been raised in recent reports. While not explicitly stated as significant issues, there are indications that inventory levels may be higher than expected, with several mentions of write-downs to net realizable value. Supply chain disruptions also pose a risk, particularly due to changes in global lithium resource supply chains. The development progress of Argentine Salar projects has been slow, hindered by harsh environments and technical challenges. Additionally, supply chain cost volatility risks persist, and potential changes in carbon emissions regulations may impact operations. That concludes the financial summary for Ganfeng Lithium Group Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.